Good morning, everyone. I'm Sarah Butler-Sloss, and as Chair of Trustees of the Ashden Trust, one of the Sainsbury Family Charitable Trusts, it gives me great pleasure to be one of the organisers and sponsors of this very important event. I'd like to begin by thanking co-hosts today, the City of London, Carbon Tracker, and the Mark Leonard Trust, and all the brilliant and visionary speakers we've heard from and will be hearing from today. In particular, I'd like to thank the amazing Christiana Figueres for her clarion call for action to the finance sector and to speed up your action and your ambition to address climate change. I'm here today as co-founder of the Europeans for Divest-Invest movement, and I'm thrilled to see so many of you here today, asset owners and managers, pension fund managers, and even oil company executives. I believe that one of the key drivers to climate change solutions lies in how our capital markets are going to behave in the next 10 years. To that end, many of the people who have the capacity to solve one of the world's biggest challenges are in this room today. I'd like to talk to you today about how civil society expects you to use your power and influence to leverage change commensurate to the climate change challenge we now face. As we know, climate change impacts on every aspect of human life, from our health and our life expectancy, our food and our water, our jobs and our national economies, our homes and our cities, as well as the natural world that we are so dependent on. That's why 5 years ago, my husband and I decided to divest Ashden Trust's investment portfolio away from fossil fuels and to invest instead in climate solutions. Our grants support sustainable development and urban regeneration, international development and poverty alleviation, all of which are going to be profoundly impacted by climate change. It seemed wrong if the great work that we were supporting through our grants was going to be undermined by our investment portfolio. We wanted there to be integration and shared objectives between our grant giving and our investment portfolio, not to have divested from fossil fuels we thought would be akin to a cancer charity holding tobacco shares. But what about our fiduciary duty? A leading charity firm, Bates, Wells and Braithwaite, has concluded that given the evidence of the man-made contribution to climate change and the consequences of it on humanity, it is reasonable for a charity with a purpose to protect the environment, relieve poverty and improve health to divest from carbon-intensive investments. Soon we'll publish a new legal opinion that will clarify the degree to which investments in carbon-intensive assets conflict with charities' objectives and so could deem them inappropriate. Any foundation, faith group or organisation that is concerned with improving people's health, alleviating poverty and protecting ecosystems might have to take the moral stand and divest. It is clear, therefore, that our duties as trustees, whether of pension funds or charities, is changing. Trustees of charitable trusts, like the Ashden Trust, also have to protect the income that our endowments generate in order to protect our grant giving. We were therefore very proud and delighted that as a result of divesting and investing, our decarbonised portfolio has outperformed its carbonised benchmark for every one of the last 5 years. Yes, the financial case to divest from fossil fuels is becoming more and more compelling, as you've already heard today. The development of sustainable energy technology is steadily consigning fossil fuel energy to the history books. You only have to look at the relative cost curves of solar, a quarter of the cost it was 5 years ago, while the costs of fossil fuel extraction are only going up rapidly. or to hear Elon Musk talk about his Powerwall and see the falling cost of energy storage, to see that there will only be one eventual winner in this contest. It's just a question of how fast this will happen, whether we can make this change and shift the flow of capital in time to avert a climate disaster. As Stephen Heinz, head of the Rockefeller Brothers Fund, says, we strongly believe that if John D. Rockefeller was alive today, he would be moving his money out of fossil fuels and investing in clean, renewable energy. After all, as we are continually told, we haven't got long to avert climate disaster, and the sooner we act, the more orderly the transition. For me, the tragic scenes being played out across the Mediterranean are made all the more upsetting by the thought that should we get to a 3 or 4 degrees warming, they will be an ever-present reality of the world we have created. The forces at play to stall progress are enormous. With the ethical, the financial, and the legal cases aligned to the climate urgency, and the climate urgency being ever more pressing, earlier this year I founded Europeans for Divest-Invest with my brother Mark Sainsbury, 5 other foundations, and Divest-Invest Philanthropy in the USA to encourage more foundations and other institutions to join our campaign to divest-invest. And what is very exciting is the momentum with which this movement is moving. The growth in funds divesting investing has grown from $250 billion a year ago to $2.6 trillion this year, and this is just the beginning. It is coming from all parts of society, from the Californian State Pension Fund worth $500 billion to Kirklees Council, from Leonardo DiCaprio to the world's biggest sovereign wealth fund in Norway, from the British Medical Association to Glasgow University, and from the Rockefeller Brothers Fund to the Children's Investment Fund Foundation. And it's not just about the money. Divest Invest, above any other movement in the climate debate, is enjoying a huge groundswell of grassroots support, from university campuses to AGMs, from church congregations to family offices and boardrooms. It's becoming more and more difficult to ignore. To us, the significance of the Divest Invest movement goes beyond the ethical, the financial, and the legal arguments. It's a tool that seeks to devalue the political capital that the coal and the oil sector enjoys and challenges their social license to operate long term. Divest Invest has huge symbolic power in a hugely complex arena. It is an easily understood message. It tells the fossil fuel companies that it is not okay to have business plans that expressly head us towards a 3 or a 4 degree world. And it tells our political leaders that we must have regulations and price incentives that keep fossil fuels in the ground. Social norms can change quickly, and we can see this now happening in the fossil fuel world. A year ago, holding coal in your portfolio was perfectly normal. Now it's not. It's becoming something you have to think about, something you have to justify. Like the smoking ban that made it extraordinary to think that we once smoked in restaurants and aeroplanes, soon I believe the same will be true of our attitude to the business as usual models that many of the fossil fuel companies work to. As part of our work with Europeans for Divest Invest, we have held many informal meetings with family offices and foundations and large charities, and we have heard a recurring chorus. There is a lack of quality in climate solution financial products out there. There are too few low-carbon funds. There's a lack of carbon transparency within ordinary funds, and frankly, a lack of expertise amongst financial advisors to properly guide their clients to the climate risks within their portfolios. With this in mind, I'm delighted to hear that BlackRock is exploring a fossil-free product for launch in early 2016. This is thanks to the really determined coalition of civil society actors, including Share Action. So we need the financial services sector to respond to these challenges, to properly cost the risks of carrying on as usual, to bring the subject up with their clients. Surely clients need to know the climate risks in their portfolio, and surely managers need to know their clients' appetite for that risk. We also need all of you to increase the pressure on our political leaders to recognise the financial risks of climate change in policy and regulations. We also urge managers and clients alike to become forceful stewards to all their investments, to insist that all the companies in their portfolios have business plans that align to a 2 degrees world. So I come back to the point that I made at the start of my speech. It is within your gift to leverage the changes we need, and I call on all of you, whether asset owners or managers, to take a leadership position and to become future makers, not future takers, in the way we respond to the dire threats of climate change. As Ban Ki-moon said, we are the last generation that can take steps to avoid the worst impacts of climate change. Surely we owe it to our children and their children to accelerate these steps to start the orderly transition to a carbon-free economy. Thank you for listening.